Hello, everyone. I'm Joe Welu. Thanks so much for tuning in to Expert Insights, where we talk with industry leaders across modern financial services to discuss leadership and innovation. Let's get started. Hey, everyone. Welcome to the podcast. Excited today for our guest, Mr. Justin Messer, President and CEO of Prosperity Home Mortgage. Prosperity is owned by Home Services of America, which is an affiliate of Berkshire Hathaway. And Justin, maybe give a little background on Prosperity. First of all, welcome to the podcast.
Thanks.
Glad to have you, bud. Give us a little bit of a background and a point of view, the scale of Prosperity for those of our viewers that may not know much about Prosperity.
Yeah. So Prosperity, like you said, is owned by Home Services of America, which straddles between first, second, and third largest realtor in the country. You don't really see any Home Services of America signs out there in yards, which is why it gets a little bit confusing. But Home Services owns about 50 real estate brands throughout the country, as well as has a very broad franchise network as well, meaning BHHS or Berkshire Hathaway Home Services, kind of those purple signs that are prolific throughout the country. We also have a franchise network of those. Some of those are owned stores, some aren't. Our primary responsibility is servicing all of our agent networks. That includes our franchise network, as well as what we call our own stores, or stores that are part of Home Services of America. That network of agents, totally combined, probably somewhere around 100,000 agents, own stores, meaning who we're direct affiliates with, on a given day, over 50,000 real estate agents. We have, about 700 branches throughout the country, about, 550, 600 loan officers active, servicing primarily those affiliate agents. We're primarily a purchase lender. Did about $7 billion last year. We'll do about $8 billion this year. Again, primarily purchase. That being said, only about 2/3 of our purchase comes from affiliate agents. About 1/3 of our purchase comes from outside agents, whether it be a Coldwell Banker, an EXP, a Compass. It doesn't really matter. We're indifferent. Our focus is just building the best purchase mousetrap possible, and servicing agents, across the spectrum.
Well, reputationally, you guys have an amazing reputation, Justin, and a lot of that credit goes to the focus that you guys put on the customer. And I wanted to maybe get your point of view on how you look at your specific customer, who your customer actually is, how you define that, because I believe that's really the foundation for all of the success that you guys have had and continue to have, right?
Yeah, I mean, great question. I think in different spots of our organization, you have a different view of who your customer is, right? And I would say at the top of the house, my focus, right? I have 3 customers in every transaction. My customer is my mortgage consultant, which is what we call loan officers. My second customer is naturally the potential homeowner, the borrower, whether it be a refinance or a purchase. And then in purchase transactions, my third customer is always the real estate professional that's on the other side of the transaction. And that could be both real estate professionals, by the way. That could be the listing agent as well as the buyer's agent. And so everything we build is completely focused around those experiences. And one funny thing that we found kind of 5 years ago, I'll just jump into this really quickly, is we have a hyper focus on communication and updating and making sure everyone knows what's going on in the transaction at all times. But our mortgage consultants were doing a fantastic job of that with the real estate professional, not a great job with the actual borrower. So the borrower was like, what's going on? And we're like, well, call your realtor. That's what they're there for, kind of a scenario. So we had to make some pivots around that, which we've done pretty significantly. But, those are kind of the 3 stakeholders that I look at in every transaction.
Yeah, and absolutely makes sense. You guys are looking from a very long-term perspective. How do you build the best organization possible? And the fact that you really are thoughtful about the experience that the loan officers have, how you're enabling them with technology, how you're training them, you guys look at those specific customers individually and think through all of the touch points and interaction you're having with your sales organization. Is that how you guys approach it?
Yeah, I mean, so when you think about some models that are more transactional, A loan officer, may have hundreds of at-bats or opportunities a month to touch the customer. They lose one, they move on. When we take very seriously the fact that we are stakeholders with our mortgage consultants in the relationships that they've built over years and decades with real estate professionals. A real estate professional trusts us with their transaction. The borrower or potential home buyer is trusting us with that transaction, but the mortgage consultant is trusting us with that transaction. If you only get 7 high quality at bats a month, I have to make sure I convert a very high percentage of those, and I have to make sure I do it flawlessly because, you know, I think that's one thing about training your operations staff and your back office staff when you're a purchase driven model is that the mortgage consultant isn't raising their hand and putting urgency behind a file necessarily because of that
Right.
individual file. It's not because of the commission check that they want. It could be a little bit about that, right? But it's not necessarily about that. Instead, it's about protecting the experience of the referral partner in addition to the borrower. So they have multiple things at risk here. And, as an organization, we feel the weight of if we mess up a transaction and an experience for a customer, that could have really, really long impact, probably just beyond the sphere of that customer, but also to that referral partner, meaning the real estate professional and their sphere as well. So there's high stakes in the purchase, business that I think don't necessarily always exist, in kind of the slightly more transactional pieces of the business.
Yeah, no, that's well said. And one of the comments that you've made to me in the past that I think is understated in the importance of it is that the customer experience, regardless of which stakeholder, is only as good as your last touch point, your last interaction. Is that really, you guys, I know, go really deep and analyze everything and try to optimize all of those things. But is that really how you think about it? Is looking at, did we call this person back? Did we send a text? Did we keep them updated? Are you getting that much in the weeds, or is your team getting that much in the weeds?
Absolutely. And, I think to that point, you have to think about things holistically, and we focus a lot on the front end, obviously, right? So like, what does the initial intake of a consumer look like? What does the application process look like? What is the handoff to operations, which we've, recently actually instituted video into that handoff so that our operations team is actually introducing themselves directly to the borrower in that pass off to operations just to humanize it
So
and
wait,
understand it.
wait, wait, let me get this straight. So you're
Yeah.
having operations, a video from your ops team actually go out to the consumer to introduce them as part of the process. Is that right?
Yeah. And I mean, these are people that aren't necessarily in love with camera or video, right?
Totally. That's why I'm a little surprised. I know you guys
Yeah.
are
So
really forward on this.
yeah, that was as we really, really have unpacked our customer experience and our surveying or interviewing with customers and found any spot where we have gaps. And one spot which has traditionally been a gap is people get confused when they get passed over into operations. And if you do it really well, which means you have very good client interacting operations team, they're like, is this now my loan officer? What just happened? Who is this person? What is their really
Yeah.
role? Are they an underwriter? I don't even know what that means. Tell me about this. So we just try to define the roles of folks and say, we love the term concierge because concierge is what everyone wants. And regardless if you're at the $2 million price point or the, $55,000 price point, you want a concierge. And so when you pass it to your operations team, having the team leader of so maybe that team leader oversees 6 7 8 different we call them client care specialists or processors, whatever you want to call them, having that person be the face of that team and say, hey, my door's always open, here you go, here's what that looks like, and then fitting that into the journey, we think was a very, very important stepping stone into keeping the borrower educated, making them feel like they're humans that are interested in their transaction,
I
and
was
also
just going to
having the
say,
team member
you really go.
express to them that they understand the importance and the gravity and what they're dealing with and what they're going through. So having a little bit of that empathy, because I think the operations staff sometimes gets thrown into this robotic, non-empathetic, mold that's not really honest. It's not true. It's like really they have the empathy that the mortgage consultant has as well. They just need to kind of get on video for a minute, and it's worked well for us.
So the power of that human to human interaction is really foundational for how you guys think about the transaction. And why do you think it is so many organizations fail at bringing that human to human connection into the rest of the process? Is it, is it just we're so as an industry, it's ingrained the next deal, the next deal? I mean, you guys obviously are one of the leaders in this, so I'm just curious on your
Yeah,
point
well,
of view.
yeah, so I'll take a step back and I'll say this, like, so for, many years we've had, the single asset report approvals through DU, like the hey, get an asset report, instant approval almost basically through DU, et cetera. The push button, get mortgage baseline, right? Not quite there, but that baseline.
Hmm.
So we had a decision point, say 4 or 5 years ago, to say, hey, we could just expose this out and say, here you go. Basically, have a realtor just have someone throw in an application real quick and then spit right back to them that they're approved. And we pivoted back from that, right? And we said that's not who we are. It's not who we are because it's not respecting the gravity of the transaction. And then in addition to that, you know, purchase contracts in real estate, that kind of dictates the timing of the transaction. So in a refinance transaction, me being able to approve it in 15 minutes and me being able to close that in 8 days, there are a multitude of benefits from that, including not having 50 people in the transaction against me and all those types of things that really make it difficult. In a purchase transaction, a super fast approval creates a desert of time, and in that desert of time, all kinds of things happen. So if I approve someone
Like,
on day one and they're not going to purchase a home for 45 days, how do I keep them
yeah.
engaged and on a journey and let them know that everything is fine? Because they don't understand that. It's never been, someone's experience with that, I would say. So you have to have a human interjected in the transaction early and often, so that they know they're doing the right thing, so that they can guide them appropriately, so that there's someone that can update them and keep telling them. I'll just tell you this from experience, like, people every 6 days just want to know that everything's on track, like, even
So
if
it's
nothing has
interesting.
changed.
It's interesting. I looked at some of the data yesterday in preparation for this, and you guys have one of, if not the highest conversion rates from application to close. And do you attribute just how much interaction and engagement you put into that window of time?
Absolutely. And
Yeah,
personalization of content, like,
yeah,
don't underestimate that. And when we look at it, it's like, we had plenty of folks that, I would say, as we made the transition to try to be, a little more personalized throughout the journeys, right? We had plenty of people who were still on, whether it be text-driven journeys or cartoon-driven journeys versus personalized journeys, and the open rate and conversion rate on folks who interacted directly with video was so drastically different
it's
versus
off
the
the
people who had
charts.
more. It's off the charts. And so, what I love to say, and I'll say, depending on your role, you might not like to hear this, you might love to hear this, but loan officers say to me, if you just lowered rates by an eighth, my conversion percentage would go up X, Y, or Z. And I say, if you just shot your videos and made them personally and reached out to people and shot an occasional bomb to people, guess what? Your conversion rates will go up the same amount. So, like, if we both
Yeah.
do this together, then we're on fire, right? So, like, there
then
are
it's
many
then
ways
it's
to
a
move the
force
needle.
multiplier. So
Yeah.
you're looking at the chessboard saying, how do we optimize everything, basically? So one of the conversations we've had a couple of times is what I call, I guess, the data arms race that's happening in housing and mortgage and lending these days. And I think you alluded a little bit to that in saying the fallout that can happen when you first interact, do an application with a consumer, they're out house hunting, right? There's tremendous opportunities for them to get pulled away, for lack of a better word. How do you guys think about the importance of data as it relates to that customer relationship?
Well, um, I think as we talk about, kind of our Apollo mission, if you will, as an entity overall, whether it be prosperity, whether it be other spots in Home Services of America, we would love to think, hey, we're going to be proactive and go out there and get people before anybody else. But the reality is, like, you have to, like, protect your own house first.
Yeah.
And the thing that we found is kind of housing all of our data in a centralized point, understanding our consumers, and then at a minimum, I would say having a puncher's chance at the next transaction, right? So the
Yeah.
worst case scenario is somebody else gets in front of your past client, and in the real estate world, they refer them back to you for a cost. That's the best case scenario. The worst case scenario is that person transacts and you have no idea it's a tree falling in the forest, right? You have
Yeah.
no idea they transacted. The next time you call them, they don't even live in the same town, and they're somewhere else. And we say, well, what happened? And they say, well, somebody reached out to me and it was easy. And yeah, they jumped in front of it and
Sorry,
gave me a good deal.
you weren't there at the second that it mattered, right?
Right. And it's really tough to be there the second that it matters for 7 to 13 years, like in between
Yeah.
transactions, right? Now, refi is a little bit different. We're talking about the purchase side of the business here. So, you know, our concept is staying in contact, staying top of mind, and taking those shots to get people to raise their hand potentially if there is interest there. But also then trying to be more proactive, around monitoring behavior, right? To the extent we can, and understanding what triggers that looks like and where that will mature over the next 5 years, I think is very different from where it is today. So I think we get down on ourselves by, we're not as successful today as we'd like to be. But I think being on the journey on that and looking at where that's going to go over the next 5 years, again, you at least have to have a puncher's chance, because the idea
Yeah.
that once you have a consumer, you're always going to be that consumer's first choice, or you're going to be the only one monitoring their behavior, I think is probably a kind of a foolhardy thought these days.
Do you think being a customer for life company or really focusing on maximizing that customer lifetime value is one of the key growth drivers for you guys as an organization? How do you look at that loyalty, that customer loyalty as part of your growth? And maybe just give some context on, as you think about new customer acquisition versus loyalty, how do you weigh the two?
Yeah, I would say this. Our organization is built on the concept of ease of transaction, and mortgage is one of the legs of the stool, so to speak, right? So
Mm-hmm.
we have real estate, we have mortgage, we have title, we have insurance, we have inspection, we have moving. Basically, we want to be a home ownership platform, right? Which is aspirationally for a lot of people. Just a lot of people aren't willing to get into the hand-to-hand combat of real estate and be in the hand-to-hand combat of insurance and mortgage and all these verticals.
And try
So
to stitch it all together
try to
to,
stitch
to
it all
deliver it.
together, and that's why the amazing ability and maestroship of a buyer's agent is really probably one of the undervalued pieces of what they do. Our mortgage consultants do a great job as well. But really, if you look at what makes the transaction tick and bring all these disparate businesses in, whether they use Prosperity or whether they use a third party mortgage company or whatever, that makes it even harder, right? To have all these trains arrive at the station at the exact same time for one kind of symphonic ending to a transaction is a very difficult process. And I think, if someone that says I'm going to go buy a house, if you say, hey, I'm going to be your home buying concierge and I'm going to coordinate all of these different pieces of the transaction that need to fall into place, that's something that everyone would opt in for. Um,
It's also very different than, hey, I'll give you good service and I'll go find a bunch of houses to show you, right?
Yeah, and I
Yeah.
think that's the morphing of the role, right? And the internet
Yeah.
comes in and supercharges a lot of things. It also doesn't replace a lot of things, and I think that's the kind of that's the interesting piece of this whole discussion.
And fair to say, I mean, your background, you spent some time at Rocket and had a really very tech forward background. And you guys look at the tech as a way to supercharge the human relationships, I think is what you're saying, which I agree with, by the way.
Yeah, 100%. And again, if we think about consumer experience, customer experience, no matter where they come into, our ecosystem, whether it be through title, whether it be through insurance, which happens from time to time, real estate or mortgage, and then to real estate to mortgage, no matter what it is, like our focus is on supercharging that experience, because we really believe in the adage that we're not necessarily competing with the last time someone purchased real estate or the last time someone got a mortgage. I mean, the last time someone did those two things could have been 13, 14, 15 years ago, right? We're competing with the experience that they have in other businesses, whether it be Amazon, whether it be a trip to Disney, like it doesn't matter, right? So that's what we want to create, which is a good feeling as they think about Home Services of
Yeah.
America or their agent and Prosperity, because again, the next time we compete for this customer, right? Someone's going to have better data than us. That's what we should assume. We should make the assumption that someone is going to be better at this data arms race, but that we just need to be in the discussion. Because what can we trade off of? We can trade off of that relationship. We can trade off of the fact that we have maintained contact for the last 10, 12, 13 years in some way, shape, or form. And we can trade off the fact of kind of welling up the emotional response that they had from the last time they transacted with us. And if that response is, it was so easy, it was wonderful, it was seamlessly handled for me, they can either trade on what they know or what someone's promising them. And we feel like
Yeah.
that gives us kind of the angle into this to compete around customer for
It's
life.
so interesting, and you're obviously an amazing executive and leader and thought leader in our space, but it's so interesting listening to you talk how different your mindset is from other organizations. I think there's a group of companies out there that believe the data strategy, which I agree, you have to have the importance of a solid data strategy is critical. But you're saying actually that's just one part of the equation. The other part, and just as important, if not more important, is how that customer interaction went in the last experience they had with you, that last touch point. And you're indexing on both things, if I'm hearing you correctly.
That's why the stakes are so high,
Yeah.
and again, my first focus is going to be, I'm probably not going to ever fall into a multiple $100 million a year ad budget. I would love to,
Yeah.
but I
You
don't think
guys aren't
that's in
taking
my
out Super
future.
Bowl ads or anything?
Not
No.
yet.
Yeah.
I have a neon sign of our logo. That's about as fancy as we get.
Yeah. Love it.
So as we think about that, like again, protecting our past clients and thinking about that in terms of our minimum ante to play, right? That has to be table stakes for us, protecting that. And then as we acquire new customers, putting them into that ecosystem and protecting it, like that has to be our focus.
Yeah.
And we don't know what the future is going to hold. What we do know is we have a huge database of clients who had a wonderful experience with us, and we think that has value.
So as one of the thought leaders in our industry, Justin, would love your feedback on all of really the energy and turmoil right now around the transition that we're seeing after the NAR settlement came out with the buyer agency changes, how it's going to impact the purchase of a home. Would love your feedback, having a front row seat to all this.
Yeah, I think this is, like every kind of large change that's happened, whether it be real estate, whether it be mortgage, it's tough to predict exactly where it's going to settle. What I do know is that, we have an extraordinarily resilient industry,
Yeah,
and it will adapt. There will be a new normal. Sure, there is a path that says not much changes, right? There's a path
sure.
where this is a very low impact, high publicity, low impact event. I think that's probably unlikely. I think there's probably some changes that are going to be made. And when I think about Prosperity, we have again such a front row seat into the value of what the
Yeah,
buyer's agent delivers to the transaction. I think this debate has been misconstrued, right? And it's been
agree.
misconstrued slightly to say the buyer's agent does not add value, therefore they can be deleted from the transaction. That's the furthest thing from the truth. The debate really should be about, does the market want to set its own rate for what value they are providing? And that I think no one can argue with, right? Also, is cooperative commission something that is appropriate or not appropriate? That's not for me to speak to in terms of the seller paying the commission. What I can say is that it's a very elegant solution that has worked fairly well.
Yeah,
But maybe it's picking winners and losers. Maybe there's all types of those things. I can't comment to that. I don't know enough about it, quite frankly.
yeah,
But are there going to be a percentage of transactions, just like there were yesterday? Well, maybe go up a little bit because of publicity, where there either is not a represented buyer's agent, or the seller has both sides of the transaction and dual agency where it's permissible. I think that's probably, at least in the near term, likely to happen. right? So the question is, how do we address
Yeah.
that?
So, your point of view, home ownership being such an important financial milestone, the consumer still values having that trusted resource as part to help navigate that. And I agree with you fundamentally that there's many agents that provide a ton of value. Do you see this potentially changing the relationship as it relates to agents and lenders? Is there any, do you see any impact to
Well,
that?
I think absolutely there's going to be questions about how lenders can add value to the listing agent. I
Mm,
think we're always very focused on the buyer's agent and how we can add value to them and making sure that they get across the goal line. And quite frankly, get a commission check, right? There's an
yeah.
aspect to that, right? We want them to get through, and maybe get a commission check is the wrong term. Maybe the term is get the transaction closed, right? How do we get this across the goal line? How are we a partner in that and not, going to cause any issues with that? From the list side, I do think that they certainly take into consideration who the lender is on the transaction when they approve it, and they probably have a list that they feel better about when they see. I think, you know,
Yeah.
as a purchase lender, the goal should be very simple in the new world, which is every time a listing agent sees your company's name on the pre-approval, they should feel relief.
Yeah. And if
uh,
they don't, I remember back in when my early in my career when I was doing this, there was some letters that you would see pre-approvals that you had the opposite reaction to that, right?
Exactly. So it's like,
Yeah.
you want to be in that group of people that's the relief group, right? It's, like anything else. It's like it's very similar to having knowing that someone is a market expert when they are an appraiser, right? If you're a
Yeah.
listing agent and or a buyer's agent for that matter, and you get, appraiser XYZ who's known and respected in the market, that they know the neighborhood versus appraiser ABC who you've never heard of, maybe even coming from a state over, et cetera. You just have consternation about that, right? And so I think that's what you really want as a purchase lender. And that's why I think local lenders, I mean, I think they'll continue to be successful. They'll continue to have a niche in the market moving forward, because even though everyone could be first to data, first to funnel, et cetera, we have another opportunity to compete, which is at that exactly rubber hits the road moment, when there may be a lender out there who agents have had a bad experience with. And remember, that bad experience is like a terrible taste in their mouth. Agents are like elephants. It lasts for like 25 years. If they had a bad experience with you, just I'll let you know that. And you remember that, right?
I do.
So,
Yeah.
so, you know, you may even get them to say, you know what, I would prefer it if you use my local lender X, Y, or Z to just make sure that everything's on the up and up, and then you can choose who to go with afterwards. Hey, that gives us another shot just by being who we are and adding value, and being a trustworthy counterparty.
So you guys are thinking and really being thoughtful about the importance of the listing agent as it relates to, I mean, effectively that home is the point of sale, right? So being able to be adding value around that listing agent, that's part of how you guys are thinking about the path forward. Is that correct?
Yeah, we've always been that.
Yeah.
I mean, it's always been a focus of ours. It's just generally, I would say the buyer agent has a little bit, is a little more opinionated on making sure that they are producing a fully qualified quality borrower, and or homeowner, right, and delivering that. We don't know what the future is going to hold, right? And again, I think that the stakes are going to be even higher for those agents who are clarifying their value, because part of their value is going to be navigating this entire transaction. And part of that should be having a financing solution for the potential homeowner, right? So the buyer's agent's probably going to even become more powerful because it's only going to be the best agents who know how to pick the best lenders for their clients moving forward, right? So even though it's a smaller group, that's not going to go away. Like buyer's agency is likely, I mean, maybe I'll be wrong and this will be a really bad clip, but my thought would be that it's still
We'll
going to
delete it if
persist.
you're wrong in a
Yeah,
few
perfect.
years.
Thank you.
Okay.
Thank you.
Yeah.
But my thought would be it's going to persist. I don't know how big of a market, how small of a market it's going to be, but it'll persist. But you probably should up your game on the list side, as well, and think of ways to creatively offer, I would say value to them.
Absolutely. Think of ways to add value to your customer and in some cases, like you described it, you have multiple customers in every opportunity. So Justin, next topic I wanted to cover is get your point of view and your thoughts on what you're most excited about in our great industry over this next couple of years. So many changes happening. Technology is evolving incredibly fast. Things are pretty fluid right now as it relates to the market. Talk to us about what excites you.
Well, I think that the improvements continuously come in the customer experience. I mean, I think we see that. And I love that the focus has driven down to there. I think, there's been such a manic focus on cost to produce for so long and getting that down as quickly as possible that it's become very clinical. And choosing where to invest has been difficult because, how can you invest when all you're trying to do is reduce the cost of the transaction? So as the market, I would say, normalizes and we're able to be a little bit more on the offensive and think about where we want to invest, I think that's what's exciting. And for us, it's investing in our mortgage consultants and investing in our customer experience. So what that's going to look like and what it will look like, I think it's vital to have very, very good, let's call it portal and touch points, whether it be point of sale, whether it be a portal, whatever it happens to be, with not only, your customers, but also your partners. I think that's going to be, having that be very developed is going to be table stakes for sure, and a spot where we, I think are building a lot of focus around that. And then naturally everything post-closing. I think when a transaction is complete and it's completed well, that's when the battle for the next transaction begins. And again, not to look at people strictly as transactions, but how do I maintain that relationship? How do I stay front of mind? How do I partner with folks who are providing value post-close with me included in the message? I think that's really what we're looking to focus
deeply
on.
Personalized, right? I mean, that's you guys
As
stand.
personalized as we can make it, I think is the thing, because we want to be top of mind, right? And we also want to kind of, I would say, as we're able to build deeper context around individual clients' needs and their life situations, right? Be able to just hit them with an opportunity to raise their hand for us, right? I think that's a key moment where that's going to be the best lead that we can get. Someone who's had a great experience with us, someone who we've sent topical content to, that's hitting something that, again, we were a little bit informed about what was going on in their life and we hit something, and they raise their hand to say, sure, right? And at that point, we can get back in front of it. We can then surface that to ourselves and see what's going on with their life, and then provide, the hope is we can provide solutions for them in real estate, title, mortgage, insurance, moving, you name it. We can provide the solutions for them and get them right back on the train and deliver like a second, hopefully, easy, seamless transaction for them.
Well, Justin, thanks so much for joining us today, bud. Really appreciate the insights. And as we said here, as it April of 2024, it's going to be an interesting rest of the year as things evolve. So thanks again.
Hey, thanks for having me. Appreciate it.
Thanks so much for joining us today. Be sure to subscribe wherever you get your podcasts.